Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. The title of this video is The Power of the Moving Average 30. The power of the moving average 30. In this video, I'm going to demonstrate to you a trading strategy that incorporates, the moving average 30. We will, go through everything. We will explain to traders the mistake that they are making when they are using moving averages or any technical indicators, all right, and one will be able to make a better day or swing trading decisions. I recommend to traders to watch the full length for this video, and so they may understand everything that we are discussing in this video, so they may upgrade their trading skills. The most important in life is what? Is the ability to be, if you can be a professional trader, you will be able to trade like a professional trader. If you can be a pilot, you'll be able to pilot a plane, all right, and so on and on. But what we have noticed that human beings have spent most of their time, trying to have. But in order to have, one should be. All right. So to achieve consistent winning trade or to have a profitable trade, one should become a better trader. The purpose of this video, is to assist traders, to upgrade their ability to trade, to become, a better trader, to adopt the mindset of a professional trader. There's no need to rush, all right? So if you have been going through some difficulties in trading, you need to go step by step. That's the best way forward. Let's get started. Today is the 15th of January 2014, all right? And the time in London is 13:05 p.m. In New York, 8:05 a.m. All right? The power of the moving average 30. Here I have the simple moving average 30. This is the orange line on my chart. And below here, the red oscillator here. This is the slow stochastic 633. Normally, I use the slow stochastic 833. But for this demonstration, I'm using the stochastic 633. All right? Now, one thing we need to clarify before we continue with this discussion, all right, is that the first thing in trading is what? The trading drill. All right, the trading drill, very important. The setup, the signal, and the low risk entry point. This is the trading drill. These are the steps that the professional are following all the time. The second thing in trading is the trading triangle. The market first, the sector before the financial instrument itself. The heart of the trading triangle, we have the market leaders, the economy news, and the fundamentals. The market leaders, the economy news, and the fundamentals can change, the dynamics of the market or can change any technical setup. That's why we recommend to traders to combine technical trading with fundamental trading, which means we want to combine the trading drill with, the trading triangle. The third thing in trading is that the price is the #1 indicator. So if you, for instance, your favorite technical indicator is the RSI or the commodity channel index or the moving average convergent divergent, MACD, or the slow stochastic, when you are taking any signal from these indicators, you must confirm the signal with the price itself, always. So one example I can show you here. Here you can see that this slow stochastic 633 reaches the oversold zone, but what's this happening here? The price is, the slow stochastic is oversold, but the price was not oversold, and the price continued to go down while the indicator was giving us the warning that the price is at a support level. All right, you see now. So if one is trading indicator like this without confirming it with if for instance you take the signal here and you don't confirm it with the price, you will be in trouble. All right, that's why we say to traders the third thing in trading is that the price is the #1 indicator. Here you can see that the slow stochastic 633, which is overbought zone, but telling us that giving us the warning that the price is overbought. But we will confirming with the price itself. You see here, the price was still going up, okay, while the stochastic 633 is overbought. The signal, the confirmation take place here when the price finally breaks below the common central line and retest it right here. You see? So though the slow stochastic was giving us the warning here all this time, all right, finally, the price, breaks below the trend line and retests it here and changes direction. This is the signal now. This is what we are talking about. The price is the #1 indicator. The indicator of the slow stochastic 633 in this case was giving us the warning, but the confirmation has taken place here. So you want to time your entry carefully when the price itself, the #1 indicator, confirm the warning given by the technical indicator. Here again, the first example that I show you here, the slow stochastic was oversold, giving us the warning that the price is at a support level, but the price has dipped below the support level and continued to move to the downside. Finally, the price breaks above the trend line and retests it right here. This is the confirmation of the warning that the slow stochastic was giving us since this point. So this is a better place, to enter the trade when the stochastic is oversold, but the price breaks above the bearish trend line and retests it right here. A better signal. So in this demonstration, I want to show you the power of the moving average 30, and I want to clarify this essential point. The first thing is the trading drill. The second is the trading triangle, and the third is that the price is the #1 indicator. If you put this into use, you will improve rapidly, your trading results. This is what I care about. All right. It may take some trading a lot of time, but just remember that, very important, all right? Let's continue with our demonstration about the power of the moving average 30. The first thing we want to know about the moving average 30, and in this case I'm using the simple moving average 30, well, how we calculate that, we'll add the closing price of 30 candle bars divided by 30, that will give us 1 point, in this, moving average 30, that's how we calculate, So, because it's the price going now, we are calculating each time 30. If we calculate 1, 2, 3, 4, 5, 6, 7, 8, 9, up to 30 candlestick, we will divide it by 30, and then we have 1 point of this moving average 30. As the price progression, we are calculating each time we add a new candle bar. We will start from the second candle. So if we started here first, that's the first candle. But as soon as the price printed a new candle bar, we'll start from the second candle. So that's why we call it a moving average. So we are adding new point to our moving averages. All right, you see now? So this is about the moving average, the simple moving average 30. One thing we want to understand is that the price is the #1 indicator. Apart from the price, traders use trend lines, all right? Now, when we are talking about indicator, we say that the price is the #1 indicator. I will say to trader that the moving averages are the second, important, technical indicator. So the price, the first important technical indicator. Moving averages are the second, most important, technical indicator, or the trend line. One can replace the moving averages with the trend lines. We can replace moving averages with the trend line. Now, for the power of the moving average 30, when a price is above the moving average 30, it's in a bullish zone. So this is one thing you need to understand. So if you want to sell, for instance, all right, and you are selling above the moving average 30, be very careful, because the moving average 30 is highlighting that the bullish momentum is strong. As you can see here, in this session, the price was above. We are on the hourly chart for the Dow Jones Index. The price was above the moving average 30, and the moving average 30 was rising. it's a bad place to look for opportunity to sell because the price has a high chance to be bullish above the moving average 30. If the price below the moving average 30, there's a high chance that the price may face a lot of resistance. Trader will give priority to sell signals below the moving average 30. This is about the power of the moving average 30. Before you switch off this video, this is not the end of the demonstration. I'm going to explain to you also how we can combine the moving average 30 and the slow stochastic and the trend lines. All right. So stay with us as we continue with this discussion. So we can see here right now the market is not yet open for the Dow Jones. The market did close on the edge of the moving average 30, which we will say is in the bearish zone. But you remember what we said? The price, the number one indicator. The mistake that a lot of traders have, so you may say to me, George, understand everything now. Anytime the price is above the moving average 30, I will buy. Every time the price is below the moving average 30, I will sell. How do you buy? How do you sell? That's the key question. All right? So, suppose I create a trading system like this, and I say to you, above, buy, below moving average 30, sell. So now the price below the moving average 30, yes or no? Pay attention to the price. It's the number one indicator. So before that, the price was consolidating in this session here, if you agree with me. The market pattern was horizontal. This is what we are talking about. The price is what? The number one indicator. And we must spend 75% of our time paying attention to the price and 25% of our time paying attention to the technical indicators. The moving average 30 is also a technical indicator, but the price is the number one indicator. So here the price below the moving average 30, but the price breaks below the consolidation session, and it's retesting it here. Now, it's a resistance level. So this candle closed here on the dots, on the edge of the consolidation session here. All right, traders will look for opportunity to sell. Professional will look for opportunity to sell on the edge of the moving average 30. But hang on a second. If you are trading and you are making your trading decision on one single time frame, so I say to you, moving average 30 below, priority to bearish signal. But if you are using this trading system alone and you violate the market principle that one should not make a trading decision on a single time frame, you are likely to get into trouble. So this can be a setup for traders that are using the hourly chart as their setup, and they have to use a multiple time frame trading method, okay, to enter the trade. All right. Let me show you. So now on the hourly chart, we see that the price below the moving average 30. Let's go to the daily chart. On the daily chart, what do we see? For the same financial instrument, the Dow Jones Industrials, okay, you can see that in this case, on the daily chart, which is the higher time frame to the hourly chart, the price retesting, all right, the moving average 30 on the hourly chart, on the daily chart, my apologies to trader, on the daily chart, and the slow stochastic on the daily chart is also oversold. In this case, traders that are making their trading decision on the daily chart will be looking for opportunity to buy, while the traders on the hourly chart will be looking for opportunity to sell. All right? You see now? So in this scenario, for somebody on the hourly chart, he or she will use the line that I'm going to color now into red, okay? So in this scenario, how do we trade the technical oscillator, the RSI, the CCI, the stochastic? This is our warning line. The slow stochastic is overbought on the hourly chart. We will draw the warning line. The red horizontal line here, this is our warning line. If the price is still below the moving average 30, we will not, okay, just sell like this. So one can go, for instance, to the 3-minute chart and wait for the price to go into a declining channel. Because on the 3-minute chart right now, if you go to the 3-minute chart or 2-minute chart or 5-minute chart, the price is in a rising channel. This is what we call the market principle, the stable data. There are 3 market patterns. These are market stable data. On the 3-minute chart, the price is in a rising channel. So if we want to sell, at the time when we want to sell, we will prefer the price to go out of these channels before to go down below this channel on the 3-minute chart before we can look for opportunity to sell. But for somebody who's using this system that I'm describing here, the moving average 30, the power of the moving average 30, who decided to sell because he or she have understood that as soon as the price below the moving average 30, he should sell, he can be in trouble because on a 3-minute chart, the price still in a rising channel. This is the wrong time. At the time when we want to enter the trade, we want the price at least to show some weaknesses on our entry time frame. I'm going to go now to the daily chart and I'm going to give you more information. When the price is above the moving average 30, and the moving average 30 is rising, and the price is retesting, okay, the moving average 30, very often you see that the slow stochastic will be either bullish or oversold. Let me say this again. When a price is above the moving average 30, all right, and the price pull back near the moving average 30, very often we see that the slow stochastic also will be oversold or will be bullish. All right. So, for instance, here we are on the daily chart. Okay, so we are on the daily chart. The price you see here was above the moving average 30. As I demonstrate to you, as I said to you at the beginning of this video, the 3 important things that we need to know. All right. The first, the trading tree. The second, the trading triangle. The third, the price is the #1 indicator. We can draw trend lines. All right. So, on a daily chart, the price is above the moving average 30 and also above a rising trend line. Price pull back like this, retesting the trend line after a red candle. All right. When a red candle is closed, on a daily chart like this, the next day we are watching the activity that is taking place are on the edge of the trend line. Here, the next day, you see here, we will look for opportunity to buy, okay, if we receive a buy signal on our entry time frame. If the price goes into a rising channel, we will look for opportunity to buy for day trading purposes. Here again, the price pulled back again to retest the same trend line. Here again, it pulled back to retest the trend line. And finally, the price dipped below the common sense trend line. Though the price was above the moving average 30, here was a bad place to look for opportunity to buy because the price has violated the bullish trend line. Here you see retested here. The slow stochastic is oversold. We will use a multiple time frame trading method, okay, to look for opportunity to buy or sell. All right. But the general rule that traders should follow is that be careful when the slow stochastic is oversold, but the slow stochastic is overbought. All right. But the price is above the moving average 30. The only time you will look for opportunity to sell when the stochastic is overbought and the price also above the moving average 30. At least the price might be below the common sense trend line. Pay attention carefully to what is happening here, because when traders are using moving averages, the reason why traders get whipsaw and get into trouble is that because they forget the third important thing in trading, the price is the #1 indicator. To avoid whipsaw and all sorts of trading mistakes, trader can draw just trend lines. What I'm doing here, I'm joining this point here, and this point. You allow me to draw my trend line. Look carefully. Though the price did below a little bit the moving average 30, the price was retesting the blue trend line. So your moving average, you may think that, okay, it's dipping below the moving average 30, I may sell. But at that point in time, looking at the price sell, that's why I say to you 75% of your time, pay attention to the price, draw your trend line, draw your channel. The price is retesting, okay, the blue trend line. Here again, the price dipped a little bit below the moving average 30, which means the price dipped below, the price goes into the bearish zone, but the price was retesting the moving average, the blue trend lines. Here again, the price dipped below the moving average 30, but the price was retesting the blue trend line and went up for 2 days. Pulled back again and retest the blue trend line, again went up, and finally the price dipped below the blue trend lines. Okay, so to filter out, okay, false signals, if we want to sell below the moving average 30, we must combine the moving average 30 with the trend line. That's why I said to you at the beginning of this video that one can replace okay, the moving averages with the trend lines. So here you can see that the price did below the moving average 30, and what the price did, the price went to retest did below the moving average 30 and also the blue trend line, and the price is retesting okay, the bullish trend line. So price did below the bullish trend line, it retesting the bullish trend line. You see here it tried to go above it, but finally did below it. It's a bearish, though the price is still above the moving average 30, At this point in time, it's not the best place to look for opportunity to buy. One will allow the price instead to go above the blue trend line before looking for opportunity to buy. This is why we first every time, because we create a trading system, the TSTW24, the TSTWSY008, and what we recommend to traders, we have 3 YouTube channels, George Trio channel, 2488 channel, Day Pro Trader channel, where we are busy posting video explaining to traders how to day trade, how to swing trade like the professional traders. But if one is using the indicators alone, one can get into trouble. As you can see in this demonstration, though the moving average 30 is true, that as soon as the price is above the moving average 30, the price going up most of the time. You see here? It's bullish. So priority to bullish signal is true, yes or no, above the moving average 30. That's the power of the moving average 30. Priority to bearish signal, if the price below the moving average 30, all right, is true. But one should combine the moving average 30 with the trend line, which means applying the third, okay, essential knowledge that the price is the #1 indicator. And also we want to apply, okay, the trading drill, the setup, the signal, and the low risk entry point. Here, the price did below the bullish trend line and retested the bullish trend line. This is a bearish setup. We'll use a multiple time frame trading method. Here you see it breaks below, okay, the blue trend line, retested here. Now it did below the moving average 30. All right, as we will wait for this candle on a daily chart to close. One of the trading mistakes that traders are making, they don't wait for a candle to close. Wait for the candle to close. All right, wait for the candle to close. Whether you are finding your setup on the monthly charts, if the monthly candle is not closed yet, at least wait for the weekly candle to close. All right. So we'll wait for the candle to close, and then, okay, this candle here, the red small one here is closed. If you like, I put a vertical line on it. Wait for that candle to close. That's how professional trading, patiently, wait for that candle to close right here, or that candle here to close, and then in the following day, we will look for opportunity to sell. If you receive a sell signal, we will take it down. As the price going down, what are we paying attention to? The first and nearest support levels. The price always moving down from one key level to the next key levels. So what's happening here? We are looking at Dow Jones. So let's start drawing lines on this chart. On a daily chart, the price above the moving average 30, which is bullish for us. We can also see that on this daily chart, I'll remove this blue trend line, and I will highlight my new channel here, color it into red. We can see that, okay, on this daily chart, we have a bullish setup, okay. So the price breaks above the red channels, retest it right here, beautiful. This is a beautiful signal. Though the price did below the moving average 30, it was retesting, okay, the red channel here, and it took it up. This is a beautiful bullish signal. Now, the price breaks above the consolidation session, and it's also retesting the moving average 30. Let's draw another trend line. This time we're joining this point and this point. So where are we? So here we are, joining this point and this point. The price is also retesting the bullish trend line and also the moving average 30. This is a beautiful, okay, bullish setup. Do we just buy? No. We will use a multiple time frame trading method. We will not enter the trade on this daily chart, because if you enter the trade on the daily chart, you can get into trouble. All right, you can get into trouble. The price may dip below it and continue to move to the downside. That's why we use a multiple time frame trading method, so we can enter the trade at the time, at the right time, and also at the right place when the price is about to go up. We don't want to enter a bullish trade when the price is going down. We want to control the risk and minimize the risk. And it's useful to enter the trade when, okay, we receive a valid buy signal at a low risk entry point. This is a low risk entry point. So this is a bullish setup that we have found on a daily chart. The price above the moving average 30 and also above, okay, on the edge of a bullish trend line. So there is no violation of the market principle or the market pattern. On the daily chart also we have this rising channel. So there is no violation of a market principle. One of the troubles that traders are facing, they are using the RSI, they are using the stochastic, they are using the CCI, but they are constantly violating the market principle. Professional traders are aware of this market principle and they do not violate it. Another key level here on the daily chart, it is a horizontal line that I'm drawing now, which I'm going to color now into pink to praise the beautiful ladies. All right, so here we are. So we are above these rider channels. When the price come out of a channel, what do? We project the channel, all right, equal size to the upside. So this will bring us somewhere, if you allow me, somewhere in this region. You see? So we project this red channel to the other side and bring us here. So that's where the professional did stop. They are not violating the market pattern. Horizontal channel, price breaks above it, they project it to the other side. You see how this is a good place for day traders to look for opportunity to sell, because as the price comes out of the first channel and reaches the next projection, professional will be willing to take some profit or secure their gains. This is what they have done here, bringing the price back to the moving average 30. The setup is bullish, but now we must also pay attention to this resistance here in the zone of 16500 for the Dow Jones Index. So you see now, so somebody who is applying, okay, the strategy, the power of the moving average 30 on the hourly chart, if he or she is just selling at this because George Trio has said that if the price below the moving average 30, one should sell, and he is selling at this, that trader can be in trouble. In fact, the trader that is selling here like this is violating the market principle because of what we have seen now on the daily chart. That's why it's so important to use a multiple time frame trading. You see a setup on one time frame, go to the higher time frame to validate the setup. The exercise that I've done now from the hourly chart, applying this trading system, if you like to call it, the power of the moving average 30, I have validated, okay, this bearish setup. In fact, what I have found on the daily chart is that in fact this is not a bearish setup as the hourly chart is showing it to me. It's not bearish as such. In fact, it's bullish. So by drawing my warning line, which is the red horizontal line, if the price goes above my warning line and find a support, game on, I want to look for opportunity to buy. As the price going up, I want to be aware of the key resistance level. One of them on the daily chart is the level around 16500. So at the time when I am about to enter the trade, I must zoom into it. As a day trader, I want to know what is happening right now. You see now, at the beginning of the video, we have noticed that though on the hourly chart, the price below the moving average 30, which is the bearish zone, and retesting the moving average 30 on the hourly chart. But on our entry time frame, even if we go to the 1 minute chart, you can see that the price still in a rising channel. So remember what we said at the time and the place where we are about to enter the trade. If you want to sell, you want to see at least a bearish channel. And you want to sell on the edge of the bearish channel, on the upper end of the bearish channel. You want to buy at the bottom of the bullish channel. All right, you see now, it makes sense. It is also powerful. I'm going to go back again to the daily chart. Ladies and gentlemen, I care about traders and I do not lie to traders. And what I'm trying to do is just to guide traders, highlighting the errors, the pitfalls, all right, the mistakes, okay, the challenge that we are facing daily when we are trading. And if for traders that are, okay, opening their eyes, okay, keeping eyes on the price itself, the number one indicator, following the trading drill carefully, or at least trying to follow the trading drill, all right, this is very, very useful for you. All right, if you like this video, okay, like it. If you dislike it, dislike it. All right, so here we are. So put your comment below so we can keep improving okay, our YouTube video. This is very important for us, for you, for us that are YouTube creators. Okay, all right, so you see now. You see now? So if I go back again, we are now on a daily chart. So this exercise, so on the daily chart, I want to highlight some point for my slow stochastic 63. You can see that I spend 70% of my time talking about the price, and I did not say anything about the indicator. Spend 75% of your time checking the price and 25% looking at the indicators. So the stochastic was oversold here, while the price was above the moving average 30. Here, it gave a bullish signal here. I want to show you again some of the things that traders are going through, the challenge of trading in real times, what you are going through, what you will be facing, okay, what you need to pay attention to, so you may improve, okay, your trading skills. This is what I care about, nothing else, okay? All right, so here we are. Okay, losing trade do happen, and this can form the character of traders. Sometimes traders have a bad trade or a bad day, all right? Put it behind yourself, review the trade that went wrong against you. See, do not go forward if you have a losing trade. If you have a losing trade, stop. Something has happened. That's why the trade went against you. If your supervisor asks you, why did you have a 3 losing trade in a row? You should be able to explain it clearly. All right? Sometimes you may have a losing trade, but it may not affect you at all because you follow the correct procedure, but for one reason or another, the market went against you. You won't feel bad about it. But if after reviewing the trade, you notice that you did not follow the principle, suppose you were on a daily chart, you were on the hourly charts at this point in time, and you were busy selling, all right? And later on, you review the trade, and you find out that, in fact, what you were doing, you were just forcing the market, you were violating the market pattern. The market pattern was bullish, the price was in a rising channel, but because you were spending most of your time selling the stochastic, and the stochastic was going down, but the price was not going down. You will feel bad about it. But after feeling bad, okay, shake yourself, all right, or bring your woman to a nice restaurant, do some activity with your children, all right, or play some computer game for hours to calm yourself down, and then, okay, or maybe, okay, switch off your computer for a few days, and then you come back again, and then you become a better trader. This is what is important. Vast amount of money are wasted every day, not because traders cannot trade, but they are looking at the wrong, okay, instrument. They are trading. Most of the technical traders are trading indicator. Give us, okay, the smoothest stochastic. Give us the best RSI. Give us the best CCI. But when you are using the best CCI or the best stochastic, you must always adhere, okay, to the market principles. You see now? Let's go back again to the daily chart. Because you are my friend, I want to share some important information with you. As I will show you here on a daily chart, highlighting some of the bullish, I want to say bullish stochastic signal. These are bullish stochastic signal. So we want to take a bullish stochastic signal when the price is above the moving average 30. But be careful. Remember always that you are not trading the stochastic. You are trading the price self, okay, the #1 indicator. So let's pay attention carefully to these signal or warning, as I prefer to call them, because the price is the only thing giving the signal. Every other thing is giving the warnings. All right. So here, the first one here, the price was retesting the moving average 30. The stochastic is oversold. Let's start paying attention to the price self. So we will acknowledge this warning, this bullish warning, and we'll start paying attention to the price. The price did below, okay? The price breaks above. You can see here. Where are we? So let's do it properly, okay? I'm drawing the common sense between this point and this point. You see here the stochastic is oversold. This is where we are. We are here. We are here. Are you with me? All right. All right. Hold on a second. Let's zoom into it so you can see everything clearly. All right. We are here. We are here. Okay. So paying attention to the price itself, you can see that okay. So we want to buy. The stochastic is saying to buy. We say, all right, we want to buy, but pay attention carefully. The price out of a bearish channel, which is bullish, and the stochastic is telling us to buy. It's a good place It's not a bad place because what? The price is out of a bearish channel, telling us that the bearish momentum is diminishing and the bullish momentum is about to begin. True. That's true. You see here? The price did not hide it. Now we want to buy. We are looking for support level. You see here? In fact, this signal is a very good signal because there is a pattern here, a chart pattern, not a market pattern. A chart pattern, we have what we call an inverted, okay, a head and shoulder pattern. A very powerful pattern if one knows how to trade it. So there was a low followed by a lower low, and at this point the price was displaying a higher low, price retesting the previous support level. This is a good place. We can use the TSTWSY008 to participate in this swing trade nicely, okay, to cream this market consistently. You see all this time? This is a very beautiful signal here. Now, at that point in time, if you see a pattern, a chart pattern, you must always validate the chart pattern because there are a lot of false chart patterns. That's where a lot of swing traders are getting into trouble. They see a pattern, a bullish pattern, a bearish pattern, they jump on it, and the price is doing something else because they did not validate, okay, the chart pattern. How do we validate the chart pattern? We see a chart pattern on the daily chart. We are curious. Go to the weekly chart, monthly chart, see the bigger picture before you start validating, okay, that, okay, a signal. This is a gorgeous signal here. The price above the moving average 30. The slow stochastic is also oversold. Here, we confirming with the price. The price gives us a nice confirmation. Here we are. We will use a multiple time frame trading method, and we are in this trade. You see, bye-bye. All right. Second signal given by the stochastic. Pay attention carefully. The reason why I'm doing this exercise, I don't want traders to go around using the power of the moving average 30 anyhow, but so they may understand it. This is what we do at www.best-tradingstrategy.com, www.tstwsys008.com, explaining to traders and showing to traders, okay, posting videos there so traders can keep improving their skills. That's all. Their skills, that's the most important. The second signal given by the stochastic, so oversold. But look, where are we? There was a high, always the previous high, it's a key level. The price on this daily chart, okay, look carefully here. There was some high here, if you accept that, okay? Price went up, boom, 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 hit this level, pull back, hit it again, here. So the stochastic is oversold, great. We are above the moving average 30, yes. Let's draw more lines. This point, this point, this point, blah, 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 blah. Here, the market, the professional, were trying to bring the price to retest this trend line. You understand now? The price is the number one indicator. The moving average 30 is number two indicators. All right? Number two. All right? Here, right here. So, though the stochastic here is telling us to buy, well, we will draw this warning line. The only time we will say to us, thank you very much for this information. We will buy only if you receive a buy signal above this blue line. The price did not. For many days, the price stuck below it. But if you were trading a stochastic, if we are buying a stochastic, yes, the stochastic will go up, but the price did not go up. We want to buy the price, not the slow stochastic. Or we want to buy the slow stochastic together with the price. Here, there was no buy signal because the price did not go above the previous high. And you see, this is a bad signal given by the slow stochastic. The second signal here, or the third one here, the slow stochastic give a bullish signal again. This is in fact, okay, a slow stochastic pattern here that we see. Traders that are using the 24 SP will know what I'm talking about here. This is a typical slow stochastic pattern. And here the price, okay, is retesting the moving average 30 on the edge and also approaching this a key level on the daily chart. It's a bit tricky because we will be a little bit afraid that the market may prefer to push it to retest this level. So in this scenario, we must control our risk carefully. So we don't want to use too much pips, risk too much money in this scenario. We will be very careful. Take it gently using a multiple time frame trading method. Or we can just wait until the price goes above this horizontal line again. See, it closed above it on this day. The following day, he tried to retest it, and he was a bit messy here. But there was another candlestick pattern I want you to pay attention to. Okay, you see, this is you see, inverted hammer followed by hammer. This is a candlestick pattern, and then the following day, okay, you see here. So you will give priority to buy signal. Though the stochastic was oversold, here it worked. You see, it went up, but to control the risk, it will be better to buy above this resistance level because we are very close to this resistance level, while the stochastic also retested. We will be a little bit concerned also that the market may decide to retest this level, but we may decide to stay out. So we will have the choice to trade or not to trade, to enter the trade or not to enter the trade, to take a valid setup or to refuse to enter, okay, a risky, okay, setup. This is a little bit risky, all right? So we will be patient and allow it to go above the resistance level. And if you receive a buy signal above it, peacefully, okay, we want to know where are the next resistance level if you are buying, okay? The next signal given by the slow stochastic is this one here. This time, the price was retesting again a moving average 30 here. Look carefully. Always, when you're about to enter the trade, look at the price and check the price itself. What the price doing? The price on this daily chart was consolidating when the moving average, the price was retested here. So there are two levels. In fact, these two levels, the price oscillating between these two levels. So you may decide to buy here if you have received a buy signal here. It's not a bad place because we are on the base of the consolidation session and also near the moving average 30. We can perfectly hide our stop loss below it. But as the price is going up, we will be prepared to secure again as the price supporting the upper end of this consolidation session here. Because some trader will take profits. It's not easy, this one, though it worked beautifully. All right, see here? No bad signal at all. It breaks above the consolidation finally, it closed above it, and then the following day you see this stock and this is a good one. All right? Professionals were happy to enter this trade because the price closed above the consolidation bullishly, and the following day they are watching it. Now you receive a buy signal, you will take it. Here, the slow stochastic is also retesting the moving average 30 again, as you can see here. But you want to pay attention to the price, pay attention to the consolidation session. Now the price break above the consolidation session. For professional, it must retest it. Retest it here, it closed. Following day, we will look for opportunity to buy. It went up, but the following day again it went down, you see. And then blah, blah, blah. And it slowed down here for a while. And, okay, but it's not a bad signal, this one, okay? See here, it's not a bad signal. And it went away. This is about the power of the moving average 30. The inverse is also true. If you want to sell, the market has been very, very bullish. Here it is. The moving average, the price below the moving average, if I remove some line here. When you are using a trading system, do not use the moving system like a magic formula. That's why I say to trader, the most important trading tool is the trader. He or she will always make a decision either to enter the trade or to exit the trade or to stay out completely. He or she will also pay attention to the trading triangle, which means you're going to check the fundamental and also check the economy news. The economy news, the market leaders, and the fundamentals can change any technical setup. I don't know, I think I should win a prize for this, for saying this 100 times or thousands of times. I should win, okay, a prize for this, okay, for saying this all the time. So if you have been watching our video, okay, you will be already tired of it, but it's very important. That's why I say it all the time in all my videos. All right, so you see here, in this session here, we can see that the price was below the moving average 30, and the moving average 30 also was declining. You want to pay attention to the slope of the moving average 30 also. So price retested here, okay, it did below it and retested here. Professional will look for opportunity to sell. When a moving average is declining, is sloping down, and the price did below it and retested, when a price is retesting a declining moving average, either 20 or 10 or 50 or any other moving average is declining, and the price retested it, professional will look for opportunity to sell. Here you can see that the stochastic could not reach the overbought zone, but if we want to look for opportunity to sell, we are paying attention to the price. By joining this point and this point, I have a bearish trend line. The price, in fact, after dipping below the moving average 30, was retesting the bearish trend line here. Though the slow stochastic, this is what some traders get into trouble with, and sometimes they miss some excellent opportunity. They say stochastic was not overbought. Yes, it's not overbought, but the price at a resistance level. We can use a multiple time frame trading method to trade this one. But this is a bit tricky because why? There are support level here. So we don't want to sell into support level. So this candle closed nicely. You see here, it retested. I will not sell it here because I will be a bit concerned of this support level. But some traders sold it. I will not. So it closed below it. The following day, we will be watching the activity here to look for opportunity to sell below the support level instead of selling here. Though selling here offer a better risk-reward ratio, there is a very close support level here. That's why I would prefer it to close below it, and I will be willing to sell it from here and check in the next support level. You see now? All right, it makes sense? So this is a nice signal here, but one should look for opportunity to sell below the support level. As the price is going down, the price must display lower lows and lower high. So if the price displays a new lower low, we can draw a warning line there. Now, I think you didn't hear what I said. If the price displays a new lower low, so there was a low here, and display a new lower low, we will draw a warning line there. Why? Because if it failed to go below this new lower low, we will not challenge the price. We will not look for opportunity to sell. Or if we are selling like here, you see here, we are selling here, we need to be aware of this support level. So suppose you are here, the stochastic is overbought, the price also retesting this level. Okay, suppose you receive a sell signal here, which is not a bad place, you take it. You will also pay attention to this support level, or at the support level before that. All right, this is very, very important. Okay, so here didn't work this time. Price display low, followed by a lower low, but couldn't go below the previous low. You retest it here. Yes, if you receive a sell signal, you will sell, but you see this signal here has failed. The price quickly went back above the moving average at 30. It does not matter whether you're using a moving average 10 or 20 or 50 or 100 or 200 or 150 or whichever moving average you decide to use. One must always pay attention to the price itself, the number one indicator. Yes, when the price is above the moving average 30, it's better to give priority to bullish signal. All right? When the price is below the moving average 30, it's better to give priority to sell signal. But one must know how to sell and how to buy, okay, when one is using the moving average 30. I hope you have learned something from this video also, okay, and I will put it into use, okay, to make excellent day trading or swing trading decisions. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.